will be horizontal analysis using the income statement. And you notice the first thing I did, if you look at the problem you're given, it just gives you a list of things to work with. It doesn't break it down into a sensible arrangement. So you have to go net sales, cost of goods sold, gives you gross profit. So you have to add that in there. And then you arrange it. You've got your selling expenses, administrative, income tax, total expenses, and net income. So you have to put it more into a regular income statement format because you need the gross profit percentage. Okay, but the procedure's the same. The earliest year is your base year, so we get the change, which that would be 150 is the change, and then we would go 150 divided by the 600 base year would give us a percent change of 25%. Okay, 465 minus the base year of 390, that's 75. We go 75 divided by the 390, and so we have 19%. We would do the same thing for the gross profit. The amount of change is also 75 here. 75 divided by the base year, 210, 36%. Okay. Then we come down to our various expenses, and you can see where this would be handy in analyzing them. We have a 39 change, 39 divided by the 66, 59% increase in our selling expenses. The change here is 6 divided by the 54 gives us 11%. And here we have a change of 9 divided by 27 gives 33%. And overall, the total expenses as a total had an increase of 54 divided by the base year, overall 37%. And net income 84 to 63, that's a 21 change, 21 divided by the base year, 33%. Okay, and you could obviously do this the other way, where you simply went 750 divided by 600, and you would say that this year is 125% of what it was in the base year. Okay, so let's look at this for a minute, and if you were a business person and you were focusing in, you'd say, okay, we had a 36% increase in gross profit, so that's pretty good, and that's because our sales were up 25%, but our costs only went up 19%. So maybe we've got better suppliers, maybe we're buying, I don't know, cheaper merchandise. I don't know what we're doing, but there's definitely a higher, we had a higher increase in gross profit than we did in the net sales, so that's good. But then, when we look down at our net income, our gross profit was up 36%, but net income only 33%. So we go, gee, what happened? And so we look and we say, well, let's see, our income taxes were up a little bit. That would be normal with, you know, kind of the increase in gross profit, increase in tax. Our administrative expenses were up, you know, 10, 11%. Oh, but look at this, 59% increase in selling expenses. Oh my. So do you think you should go see what your salesmen have been up to lately? Okay, so check on your sales force. We don't know what's going on with those. Okay, so that's your horizontal analysis on the income statement. So now you know how to do that on both the income statement and the balance sheet.